Hello traders. So we've had a few mixed economic reports from the US economy just now, keeping the dollar index in a consolidation mode ahead of Friday's non-farm payrolls report. So the S&P might came in stronger than expected, while the ADP report came out weaker than expected, as too did the weekly jobless claims figure. Now, among the interesting dollar currency pairs to watch is the dollar yen, which has been testing its 200-day moving average and resistance between 148.65 to around 149 area in the last couple of sessions. And so far, it hasn't broken above it. And this is where we have the 200-day moving average converging with prior resistance, as you can see on this chart. Now, what the dollar yen does from here will dictate technical direction in the next couple of days, I would imagine. Yesterday, the dollar yen tried to break above the 200-day moving average but failed to do so. Instead, it gave up its earlier gains and closed lower. It's up again today, testing that same area of resistance. But will the bulls prevail, or will the dollar yen turn lower from here? If the dollar yen turns lower from here and we go below yesterday's low, I think that would be a bearish scenario, because so far we haven't had any downside follow through below that bearish looking candle that was formed in the previous session. So as a minimum, I'd like to see the dollar yen turn lower on the session before turning bearish on this currency pair. For now, it's holding steady inside what has been a ugly looking consolidation in the last couple of weeks, in the last month even. And so it needs to either break out above this area of resistance, as I highlighted earlier, to trigger technical buying above it towards 150 and possibly 151 thereafter. Or if we were to go below this support level at 147.80-ish, then that could potentially pave the way for a test of the lows that were repeatedly tested throughout the month of August at around 147 area, which is a significant area of support. And if we were to break below this area in the coming days, I think that could potentially pave the way for a big drop, possibly towards 145 initially, ahead of this area shaded on the chart between 142 to 142.80, which is a longer term support area. But for now, the dollar yen is simply consolidating between the 200-day moving average and the 21-day exponential moving average. A quick look at the stock markets now then, and here we have the S&P 500 chart, which is consolidating similar to the dollar yen currency pair. It has though broken its bullish trend line that had been in place since early May, which could be a sign of things to come. But we are lacking any downside follow through at the moment, which is keeping the bears on the sidelines. But looking at price action in closer detail, we can see that the S&P 500 created this inside bar formation following the drop on Tuesday. So right now, as at the time of this recording, the index is testing liquidity above the high of that candle. Now, a bearish scenario would be if we were to go below the high of this candle and hold there. And if that happens, then that would suggest to me that the bulls who bought the breakout above this candle are going to be trapped and their stops will be in trouble. So if we were to go below the high of Wednesday's range, I think that would be a bearish scenario from a technical perspective, as far as the short term is concerned anyway, in which case we could potentially see the index drop to probe liquidity resting below Wednesday's low at 6,415. Biggest support levels to watch include 6,365, this blue line here, which has been tested on a number of occasions in recent days, and so far it has held. Below that, there's not much significant support really until this blue shaded area, which was previously a major resistance zone before we broke above it in June. That would represent a sizable correction, but that might be something that the markets need, given that it's not moving much in recent days and investors are getting a little bit concerned about high valuations against a economic backdrop of stagflation, where inflation signs are still persistent while economic data has been weakening of late. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.